Zscaler stock is my top cybersecurity pick right now for the rest of 2024 and beyond. I think it presents a really good value today, and I'm going to tell you why, but I'll also talk about the bear case so that we can be well-rounded. Let's first dive into what Zscaler does, because cybersecurity is a pretty complex industry, and it's important to know what sets Zscaler apart from their cybersecurity peers. So Zscaler specializes in a type of cybersecurity known as zero trust security, and essentially they're looking to displace legacy firewalls. So the thought process here is that a firewall helps to keep bad actors out of your network. Whereas with zero trust infrastructure, even if a bad actor does get into your network, they're going to have to authenticate every step of the way. Zero trust security's slogan, if you will, is never trust, always verify. So this means that zero trust infrastructure will use what's known as mutual authentication, and this has seen a lot of practical use cases, such as in areas like supply chains. Zscaler actually touts that their platform is really useful for IoT or Internet of Things applications, of which supply chain is probably the largest. When we look into this article from Zscaler, they claim that firewalls cannot do zero trust because the whole purpose of a firewall is to keep bad actors out. So once the bad actors get in, then what do you do, right? So that's where Zscaler comes in. Here's a graphic from Zscaler. They claim that they block the bad and protect the good. And since their solution is cloud-based, you can connect to a cloud-based application and not the actual network, which helps provide some separation and limit the amount of exposure that bad actors can get. So Zscaler has 4 primary products. These are secure internet access, secure private access, digital experience, and data protection. However, Zscaler is quite innovative and they're constantly rolling out new products and offerings, something that I think is going to be hugely beneficial for them as customers aim to consolidate their vendors. So the thought process there being that instead of a company using 10 different providers for 10 different things, they can use Zscaler for all 10 of those things and save some money by bundling those offerings. Let's talk about these 4 products that Zscaler offers. So secure internet access is quite straightforward. Essentially, this is a secure web gateway that delivers cyber threat protection and zero trust access to the internet and software as a service applications. So this goes back to that zero trust exchange that I talked about, according to Zscaler being much preferable to firewalls. They claim a firewall is like a bridge. Once a user crosses it, they can move north, south, east, or west. Zscaler is like a switchboard. Users connect directly to the individual apps, not the network. So you get this separation effect, and ultimately they believe that it makes their customers' networks even safer. So that's the internet access. Zscaler private access gives users access to, as you might guess, private apps while enabling zero trust connectivity. So if you think of the Zscaler internet access as sort of their cloud-based offering, this is their on-premise offering. Digital experience is the next offering from Zscaler, which allows companies to have increased visibility across different devices, networks, and apps. And it can help companies detect issues before users complain and pinpoint root causes using AI. So this is similar to what a CrowdStrike does, where their platform that spans across multiple industries can detect an issue on one endpoint and then use that knowledge to protect all other endpoints. Zscaler does a similar thing, though Zscaler and CrowdStrike are quite different. They don't compete. Zscaler isn't endpoint security. They're more cloud security and data security. In fact, Zscaler and CrowdStrike are partners, not necessarily competitors. But what I'm getting at is that they both use AI because they have these big customer bases and they can share solutions across those customer bases. Finally, we have data protection, which I think is the most exciting offering from Zscaler. As big data continues to grow, it's going to be hugely important that customers with big lakes of proprietary data secure that data. So Zscaler claims a modern unified approach to data security is required. So once again, operating on this zero trust exchange, Zscaler claims you can protect data in all channels of a business. So things like web, email, and even endpoint, which is going to be things like your company computer. So those are Zscaler's 4 primary products. If we look at some of their customers, we can see that since cybersecurity is quite a broad solution, we're going to see customers from all industries. So we see government clients, the government of the District of Columbia, where Washington, D.C. is located. We have Oregon Secretary of State, and then we have things like MGM Resorts and things like Micron, the semiconductor company. So one thing that I like to look for when investing in a company, especially a SaaS or software as a service company, is that they can cater to multiple industries. There's a case to be made for what's known as vertical SaaS, where you specialize on one industry. However, I do believe that that limits your long-term growth potential, whereas Zscaler, since they cater to all industries, I believe have quite a big total addressable market. All right, so that's enough yapping about what Zscaler does. Let's look at the financials, and then I'll give a bit of the bear case and why their stock is down so significantly lately. So this is Zscaler's latest earnings deck. We can see that they actually handily beat their revenue guidance. They were expecting 24 to 25% year-over-year revenue growth, and they clocked in at 30% year-over-year net revenue growth, which is astounding. However, the stock was actually down, which we'll get to, because of some profit guidance for the next fiscal year. However, looking at what they just reported, we can see that everything looks quite good on the surface. So they exceeded their profit expectations and earnings per share expectations, and their gross margin came in higher than expected at 81%, which is incredibly strong gross margins. Even for a SaaS company, 80s is very desirable. They have a geographically diversified stream of revenues where the Americas only make up just over half of their total revenue, with the rest coming from Europe and Asia. And they have 115% net retention rate. So that simply means that this year, their previous customers are spending 15% more on Zscaler solutions than they spent last year. This is something that I look at for all SaaS companies. It shows how sticky your solution is and how easy it is to upsell and cross-sell to your current customers. This is going to fuel Zscaler's growth, and it's likely why they saw 30% year-over-year revenue growth. That's just incredibly impressive. It's a combination of that 15% from their current customers and another 15% from new customers. I love to see that. And as they're growing, they're becoming more profitable. Their operating profit increased 48% year-over-year, while revenue only increased 30% year over year. So even though the revenue is growing, they are able to squeeze out a little bit more operating profit. That's just kind of par for the course for SaaS companies. With SaaS companies, their costs to acquire a new customer are not nearly as high as the revenue that they get from that new customer. So with SaaS companies, the more they scale, the leaner they become, and the more profits they can report. Zscaler claims that they are in the early stages and that they have a large total addressable market, which I tend to agree with. I don't know about these exact numbers. This does seem, quite high. I mean, if Zscaler has currently 2 to 3 billion in annualized revenue, they claim it's a 96 billion market. They're just scratching the surface in that case. It looks like, obviously, zero trust for users and the cloud is going to be the biggest driver of that growth, but they also have a $20 billion total addressable market in data protection. I'm surprised that that's not higher. I would think that that would be quite a large market. So let's talk about the guidance that sent the stock down something like 17% after they reported earnings. So they're looking at fiscal year 2025 guidance, pointing to just over 20% year-over-year revenue growth. So that's quite nice to see. What the market didn't like is this operating profit. Even though operating profits are going to rise year over year, the operating profit margin is not really expanding that much. So we see that they had a 20.4% profit margin in this past year. They're expecting 20.2, which would be a contraction to 20.8% margin in 2025. So like I said, as SaaS companies scale, they can become more profitable. So it's strange to see that they're looking at basically flat growth in their operating profit margins. I would expect to see that continue to expand. So it's strange that even after they beat the revenue, they have this great guidance for revenue, that the profits is what's sending the stock down. To me, Zscaler is very much a growth stock. So Zscaler, 30% year-over-year revenue growth. They are focused on capturing market share, becoming more pervasive in the zero trust and cybersecurity markets. They are not as concerned with profits as they are with revenue growth. So for me, when I invest in a growth stock, above all else, I want to look at their revenue growth because that shows how much market share they're capturing. That shows how pervasive their product is getting. So for me, I'm not really too concerned with the short-term profit forecasts. So even though that is potentially a contraction of operating profit margin, I think they have plenty of time to continue to grow and expand those operating profit margins in the future. I'm talking like 10 years down the road. So with a growth stock, you kind of have to put profits on the back burner. They need to have a path to profitability, which you can see by their gross margins and their operating expenses. But I'm not so concerned with their profits today. I'm more concerned with their profits in the future, if that makes sense. They are free cash flow positive, and another bit of bad news, that free cash flow margin is expected to decrease. Okay, so let's talk about now the bear case, because that's two different profitability metrics that are not looking so hot for fiscal 2025. So why is that? It boils down to a few different things, but mainly a shakeup in their sales team. So their chief operating officer actually departed for another company and took some sales reps with him. So that's never good, especially when your company is growing quite strongly. A lot of that growth comes from your sales team. That's going to be the biggest thing in a growth stock, is selling your solution, getting more customers, getting the word out, cross-selling your current customers. So if you take some of your star sales reps from the company and move them to another company, that's not good for Zscaler. It's really not. What we also see with Zscaler is threats of increasing competition. So that is true. So Zscaler, like I said, is primarily focused on the zero trust infrastructure, but they're not the only ones looking into this. Other companies like Cloudflare are getting into zero trust. We see companies like Palo Alto Networks. Other cybersecurity companies are coming, and so Zscaler isn't going to have such a smooth ride going forward. So that's kind of the very brief bear case on Zscaler. Obviously, also there's things like valuation, which we'll look at on my spreadsheet. But I think the market's reaction to Zscaler's results is quite overblown. So let's look at the price. Zscaler, as I'm recording this, it's Monday morning. Zscaler's at about $159 a share. If we look back over the past year, they're actually down in the past year, and the stock is at the same level it was in 2020. Approximately the past 4 years, performance is zero. Now, obviously, you can cherry pick performance and make it say whatever you want. We see that since their IPO, they are still up a good 200%. But what I'm thinking is, I think this reaction to the latest earnings is a bit overblown. Look at this massive drop after their earnings results just because their profitability metrics are not as robust as the market was expecting. I don't think that that means that Zscaler doesn't have a bright future. So let's look at my spreadsheet. This is my disruptive growth stock spreadsheet where I rate stocks on 4 factors. If you've been around the channel, you know exactly what I'm going to say. These factors are gross margins, annualized revenue, price to annualized sales, which is valuation, and year-over-year revenue growth. So in my opinion, these 4 factors together can give you a pretty good picture of how a growth stock is doing and if you're paying the right price. So the reason I use these 4 factors is because a lot of times disruptive growth stocks are not profitable, or they're not paying much attention to their profits. So that's why I use annualized sales, revenue, that's the top line, doesn't look at profits, and gross margin. So that just looks at the cost of revenue minus their total revenue. So Zscaler on their revenue only pays 19% in costs. So for every dollar that they get on their platform, it only costs them 19 cents to get that dollar, is what I'm saying here. So typically higher gross margins come with higher price to annualized sales. So that's why I like to use these two things in tandem, because if you see a low price to annualized sales, you also usually see lower gross margins, right? That just makes sense. And then annualized revenue shows how much market share they've captured. I want to reward companies that have a lot of annualized revenue because they've already done the growing. And year-over-year revenue growth, if they're still early in their stages and still growing strongly, I want to reward that too. So I aggregate a score from -1 to 5 for each of these factors. The max you can get is 20. That just never happens. I don't think it's really realistic. My average is about 12, and Zscaler gets 12.6. So they're looking really good. They are actually scoring higher than CrowdStrike, and that's why CrowdStrike is not actually my top cybersecurity pick right now. It is Zscaler. When we compare these two companies, Zscaler has much better gross margins and a much better valuation. So even after CrowdStrike's recent snafu, they're still trading at 16 times annualized sales, which means their market cap is 16 times higher than the amount of money they make each year. Zscaler's market cap is only 10 times higher than the amount of money they make each year. So you're paying less for Zscaler in terms of revenue, and their growth is similar. So to me, Zscaler just looks like it has a much better valuation. They are going to see a lot of tailwinds, especially in zero trust infrastructure as they displace things like firewalls. But Zscaler, I think, is going to be a no-brainer way to go as companies want to shift to that zero trust infrastructure. And like I said, as companies want to consolidate the amount of vendors that they have. So instead of having 10 vendors doing 10 different things, they can use Zscaler to do 10 different things and save money and reduce complexity. So Zscaler, I like how it's looking. I am dollar cost averaging into the stock. That does bring me up to 4 different cybersecurity stocks in my portfolio. However, I think it's reasonable. I think these 4 cybersecurity stocks, Zscaler, CrowdStrike, Cloudflare, and Palo Alto Networks, they all do different things and they don't step on each other's toes too much. So I feel like that's justified. What is you guys' favorite cybersecurity stock, or what's a cybersecurity stock that you're watching? Definitely comment that below and let me know what you think of Zscaler. If you have any questions, please leave them below. And if you liked the video, honestly, please like it. And if you disliked it, please dislike it. I really love the feedback, constructive, even if it's critical. Totally fine by me. I'm trying to deliver good content to you guys, so I really do want to hear what you think. If there's something you like, don't like about my presentation style, please honestly tell me. And thank you so much for watching the video. I hope you all have an amazing day.